In today's episode, we are going to talk about the 7 ways the election will change the real estate investing game. We just came off of a big election week, and there's going to be a lot of changes coming over the next 4 years. And I'm excited to talk about what these changes are going to do and what it means to you if you are investing in real estate or you plan to invest in real estate, or maybe you're just out there as a homeowner and you're curious about what these changes might be. This episode is going to be for you, and make sure you stay tuned to the end, because the last one, the 7th change that I'm going to put out there, is going to be the most key and the most important one that I think is going to change the landscape for the game. Anyways, I think it's important to first remember the last 30 months, we have been in a high interest rate environment. The rates have more than doubled for essentially 2.5 years. And for a lot of us that are playing the game every single day, we get used to it. And so I personally have gotten used to this grind. But, let's face it. It's been a lot of uphill battles, and it's been a lot of headwinds to navigate. Lending has dried up. There's not as much natural appreciation with a lot of these assets. So you really have to focus on operations and forcing your appreciation and all that good stuff. We've seen some operators that had aggressive assumptions get into some troubled times. We've seen some assets go back to the banks. We ended up picking up an asset back in December through our bridge lender, which was a foreclosure. So it's happening, but it's important to remember things are about to get better. I believe, I'm always speculating, I'm always willing to be wrong here, but I'm going to outline the 7 ways that I think this election is going to change the real estate investing game. First and foremost, before the election happened this past week, they were already calling this the greatest transfer of wealth in American history these next 7 years. 40 million baby boomers are set to be retiring. A lot of businesses are going to be changing hands. A lot of real estate is set to be changing hands. And, let's be honest, 4.8 billion people are using social media. And so they were already calling this the greatest transfer of wealth in American history. Now, what happened this past week? Love him or hate him, Donald Trump got elected. It was not even close. But most importantly is this. Had Trump won the 2020 election, the House and the Senate would have been ran by the Democrats. The House is going to be ran by Republican Party, and the Senate is going to be ran by Republican Party. What does that mean? That means that all these policies that Trump wants to push forward in terms of business and real estate and benefiting the economy are going to get pushed through. So this might be the best 4 years ever to invest into real estate. This might be the best 4 years ever to get into business. So I'm excited. I feel like there's a new air, a new energy that is around America right now if you are into business, if you are into real estate. So that said, first and foremost, what's the reason number 1? First thing I see changing, and keep in mind, I'm speculating here. I'm willing to be wrong. This is just my best judgment. I believe reason number 1, 100% bonus depreciation is likely to come back. We've been in a step down the last couple years. This year was 60%. Last year, 2023 tax year, was 80% bonus depreciation. And next year, 2025, is set to be 40% bonus depreciation. That is likely going to come back sometime next year. What that means is it's going to be retroactive, I would imagine, meaning you're going to be able to take 100% bonus depreciation in year 1 when you buy these assets, when you buy these real estate deals, which ultimately allows you to front load a lot of these losses. We call them phantom losses for investing in real estate. It just gives you more tax benefits and all that sort of thing. And so if you are personally investing in real estate, you will have more tax benefits. And then if you are raising capital to buy real estate, your investors will now also have more tax benefits to invest into your opportunities, which I think is a win. Number 2 reason, the top bracket for capital gains tax currently sits at 20%. There was a lot of talk of Kamala winning and doing a 25% tax on unrealized gains. And yes, I know that would have been for folks that have over $100 million net worth. However, that would have been very, very challenging on the economy. I think there's always a trickle-down effect no matter what your bracket is. But the top bracket currently for long-term capital gains tax right now is 20%. I believe it's going to come down to 15%. So that's going to be a win. Reason number 3, it's going to be much, much easier to raise capital. So if you are out there and you are raising private capital for real estate projects, you are in construction, you're a builder, you're a developer, maybe you're buying multifamily apartments, maybe you're buying retail, office, whatever it is that you are doing in real estate. Or maybe you're in business and you're just raising capital for whatever your endeavor is. it is going to be much, much easier to raise private capital. A lot of money has been off the playing field and sitting on the sidelines over the last couple of years because of the rate environment. People can get 4.5% risk-free sitting in long-term government bonds, CDs. And so a lot of that money has been off of the playing field. As the rate environment normalizes, it's not going to happen overnight, but over the next 12 to 18 months, I believe we're going to see the rate environment normalize. As that happens, a lot of this money is going to flow back into the arena, back into the playing field, and it's going to be a lot easier to raise capital. We're going to see a lot more money being easily accessible out there for everyday Americans. Number 4 reason, lending will also become much easier, right? Capital development is a very big part of building a real estate portfolio. So you got lending and you got equity, right? You got to go raise capital, but lending is a big part of it. Your lender is often your biggest partner in these real estate projects. Often they are funding 65, 70, even 80% of these real estate projects. I've even bought a couple deals that I own today where the bank has funded 100% of the purchase price, no money down. And so your lender is always your biggest partner. Lending is going to become much easier. It's been a little bit of a challenge getting lending. A lot of lenders are pulling back. They have stricter guidelines because of the rate environment, because of all the bad news in the marketplace. And so that is going to ease up over the next 12 months, 18 months, 24 months. So keep an eye out for that. Also, I'll say this. If you guys are out there listening to this and you're like, hey, I want to get into the lending game as a broker or a mortgage lender, a lot of the mortgage lenders that were so have washed out of the industry over the last 18, 24 months because of the high rate environment, because less transactions were getting done. And so right now is your opportunity. If you are looking to get into lending or you are looking to become a real estate agent, a lot of the bad agents have washed out. They've gone on to get day jobs and 9-to-5s. And so I'm telling you right now, this is the opportunity to get in the game because these next 4 years, I believe, are looking very ripe. Next up, number 5, the rate environment will stabilize, okay? Yes, I understand the spreads have gone up since the election, but these are lender baked-in spreads. I don't really care about that. What I am watching is the federal funds rate. Yesterday, the Fed had a meeting. They're going to do another rate cut, okay? And so think about this. Over the next 12 months, 18 months, 24 months, the federal funds rate is going to continue to cut and decrease. And I believe over the next 4 years, this trend is going to continue. And what happens when rates go down? Asset prices go up, more demand hits the market. People can afford to pay more based on the same monthly payment. Okay, next up, number 6. This is a very important one. Whenever you are building a real estate portfolio, the number 1 and number 2 thing that you need is capital development, that's access to money, and you need deal development, that's access to good deals. Deal development and deal flow is about to increase. Why do I believe that? I believe that because the bad news that we've had over the last 30 months in the marketplace is about to change into good news. The rate environment is going to normalize slowly, and we're going to see a lot of good news enter the marketplace. And with the good news, asset values will tend to go up. And because of that, a lot of people that were sitting on the sidelines waiting to see what happens with the election are now going to be open to listing their properties. They're going to be more open to sale opportunities. There's also going to be more buyers, and with more buyers comes more demand. And with more demand, there's more sellers that are willing to take their properties to market to see what they can get. And so I believe over the next 3 months, 6 months, 9 months, you are going to start to see deal flow tick up. Transactions have come to a screeching halt over the last 12 months, really the last 18 months, and that's about to change in my opinion. Okay, last but not least, number 7. This is the 7th way the election is going to change the real estate investing game. This is very important for every one of you guys listening to this. If you are thinking about getting into real estate or you are in real estate, inflation will continue. It's important to remember the Fed printed 80% of the money supply since 2020. That money has been sitting on the sidelines because of the high rate environment, the long-term government bonds. People can get 4.5%, 5% risk-free in a CD. That money has been on the sidelines. It is about to enter the arena again. Okay, so think about that. The money supply is essentially doubled. The rate environment is going to slowly tick down. The Fed is already coming out announcing rate cuts. Okay, and so think about what's going to happen. There's going to continue to be inflation. Asset prices are going to go up. What is the best hedge against inflation? The best hedge against inflation is always going to be real estate. Okay, you can get leverage. You can put a little bit of money down, small percentage down to buy an asset. Rents go up over time. Asset prices go up over time. ADRs go up over time. Real estate is always going to be the best hedge against inflation. It is also evergreen. There's never going to be a replacement for two things: a place for people to sleep, a place for people to store their belongings. And so inflation is going to continue. And I think that gives us as real estate investors a little bit of confidence going into the next 4 years. I know I'm excited about what's going to be happening. Let me recap the 7 ways the election will change the real estate investing game for you over the next 4 years. Number 1, 100% bonus depreciation is likely going to come back next year, retroactive for the past few years. Number 2, the top bracket for capital gains tax is currently at 20%. There is talks of a 25% tax on unrealized gains. That's no longer going to happen. The top bracket for long-term capital gains tax is likely to come down from 20 to 15%, which I think is a win. And then number 3, it's going to become much easier to raise capital and access capital. Number 4, lending will become much easier to obtain. It's not going to happen overnight, but I think over the next 3 months, 6 months, 12 months, it's going to be much easier to get lending. There's going to be more options out there for everyday people. Number 5, rate environment will likely stabilize. We're already seeing the Fed come out and announce rate cuts. The rate's going to start to level out over the next 12 months, 18 months. Number 6, deal flow will increase. There's going to be more opportunity to buy more deals, but keep in mind, with more opportunity comes more buyer demand. Right now, there has not been a lot of demand, so I believe right now is the time to act. Number 7, inflation will continue. The government's just going to continue to print money. We are going to continue to see inflation. That's just how the game works. Real estate is the best hedge against inflation. I'm excited. The greatest transfer of wealth in American history is about to go down. 40 million baby boomers are going to be retiring. All these businesses, all these real estate deals are going to be changing hands. And I'm telling you guys right now, 4.8 billion people are using social media. And from a political standpoint, a lot of policies are going to be put into order that are going to boost and stimulate the economy. So if you're not excited right now, you're not excited to go out and attack these next 4 years, this game might not be for you. That's it for this episode. Hope you guys enjoyed it. We'll see you guys in the next one. Thanks for tuning in. Peace.